We're going to go through the April 2023 Central Ohio market numbers. Now, Danny was kind enough to pull again all the data, and it's a continuation of the same story. The bottom line is seller's market is increasing. There's a lot fewer houses on the market, and everything's trending towards a hot spring market coming in. So we'll start off with the interest rate. Danny, I know you've been tracking that over a year now. How's that looking today?
Yeah, so we'll flash the chart up here on the screen. I mean, really, for the last, since November, when things went just above 7%, they've trailed back down, but really bounced around between 6% and 6.5%. That's where we were coming into early May here at 6.39%. The thing that's different is if you look back 12 months, it's not 3% anymore. In May of last year, we were sitting about 5.25%. So this is really the new normal. I think a lot of people have baked this into their pricing as they're shopping for homes. And people are just kind of oriented around the fact that this is reality, and they're acting accordingly. So I don't think we're seeing as much of an impact month over month that we did in the past when things were going up last year. Things have kind of settled back into the normal seasonal routines here. So we're rebounding in spring just like we normally would, regardless of where the rates are.
Right. So we're going to see more of an impact there on the supply and demand side, because like we were talking about before, if you're in a nice cushy 3% interest rate on your current house and you don't have to move, the likelihood that you are going to move is going to be much slower. And we have just fewer houses on the market. That's reflected in our next set of numbers, which is number of homes sold. That actually dropped for the first time into the spring market. Danny, you want to run through that real quick?
Right. So you can see, I mean, if you're really good at math and you look at April of last year to April of this year, you're probably automatically thinking, wow, that's 26% that we're down. And that's exactly right. But that's more of a reflection of the rates as we've seen previous months. We've looked at this data. If you really look month over month, we're down a little bit. We're down a little bit, and there was an extra day in March. So, I mean, we're pretty close to the same. The trend is really, if you look from the summer down through the winter, that's totally normal, and then rebounding after January. That's all normal. That's what happens almost every year, right? The spring's here, people start to think about moving, and then that really escalates all the way through the summer. So, we're down a little bit, 4% over the previous month in terms of total homes that have been sold, but this is still a continuation of the trend, which is, seasonality's here. We've rebounded. People are putting homes on the market, and there's still an appetite to buy homes, right?
Yeah, there's still a really big demand, but again, so I think if we go year to year, last April, we were still in the lower rates. I know you have that reflected. Those are starting to climb up, so we actually had a higher than usual level of activity because people are trying to beat out the higher interest rates. So, we just don't have supply. We don't have inventory. And we'll see that reflected in other numbers. But the net effect of that, having a very, very low supply and a regular, if not higher level of demand, is that these prices are going up. And one of the ways we count that is the asking to sales price ratio. So Danny made this couple charts here.
Yeah, and it's good to point out too, like while we're talking about inventory, and I think it's a really good point that you just made, and the number of homes that are sold is not just constrained by the amount of demand, it's constrained by the amount of supply. And right now, as we entered the month, there were just over 1,400 homes that were even listed. So you think about last month, we sold over 1,800 homes, over 1,900 were sold in March, but there's only 1,400 even on the market today. That's one of the things that could hold back the number of homes sold as we look at future months, not just the level of demand, right? So it seems like right now, you do the math, that's 0.8 months of supply that we have on the market as of today. So that's interesting. And you mentioned as we look at the percent above asking versus percent below asking, this is another one that's really rebounded over the last few months. You can see that there's fewer, just 16% of homes that were sold last month that went 5% or more below asking, and many more that went above asking. So we're up 23% of homes that were sold were 5% or more above asking. That's a reversal from where things have been in the previous months when things slowed down over the winter. And definitely, again, a sure sign of spring.
Yeah, for sure. And then the average sales price, which is what everyone's interested in, even though that matters a little less, but it's a good tracking number. Every house is individual, is why I say that. That's up. We're up again over last year, this time, over this year, all months. And that's, of course, because seasonality. But even over last year, in the hot periods building up, I think we're getting ready to catch the highs of the market again. And you have two lines going here, Danny. Why don't you explain those real quick?
Yeah, this is an interesting one because you can see that they've kind of crossed over the last year, right? Things are going up, up, up. And keep in mind, when a realtor goes to price a house, they have to look at what sold previously in that neighborhood. What was a comparable sale, right? And usually they have to have several comparable sales to base their opinion of where to list the house. So in other words, the appraiser is eventually going to come in and do the exact same thing. The person that represents the bank and assesses the value, they're going to say, well, what have things actually sold for? And that's why last year we had people going above asking, and there was this whole appraisal gap coverage dynamic that was going on, which meant, hey man, you can pay anything for a house, but if it's above what the bank is going to appraise it at, you have to cover that gap, because the bank is going to only trust that value that the appraisal looks at. So it looks at historical sales, and that's what's happening here. You see the gap between where people are listing, that's based on previous months. And as you saw that things were climbing, that blue line was chasing the orange one for the first several months on this chart until things turned a corner. The rates got so high so quickly. Seasonally, things started to slow down, and all of a sudden, people were pricing the old way. They were listing the old way, and all of a sudden, buyers weren't able to afford that amount, and that's why you see that the sold price was actually coming down below, on average, the list price. And so that happened all the way through the winter, and now what you've seen over just the last several months was that rebound, that very sharp rebound in January, and now you see these lines kind of connecting again. Right. So the thought is that as things heat up again, we start to see multiple offers. It's likely that the actual sales prices that we're going to see are going to go above asking. And I think, Rob, you probably have some anecdotal evidence with some of the clients you've represented recently, just in terms of bidding on houses that would support that.
Yeah, we're all these numbers lead to the fact that we're in a full seller's market again, off to the races completely. If buyers don't come in, assuming the house is nice, of course, and there's a demand for it. If they don't come in over list price with appraisal gap coverage, willing to waive inspections or buy it as is, even if you inspect, you're just not getting it. We're seeing multiple offers again on every house that I've been seeing, between 5 and 10 offers. They're way over. Everybody's got cash to cover that appraisal gap, like you were saying. It's a tough market for buyers right now, because of the competition, because the supply is so low. So I'm not surprised that this is a trend. I'm not surprised by the other numbers. Average days on the market, it's way down from last month.
Yeah, that drop, I mean, wow, that was huge, right? We're 31 days on average on the market last month, down to just 21 days. If you look at the median, down to 4 from 6 in March. So same story, right? Things are waking up here. We're getting back into that very strong seller's market. I don't think there's anything left that would indicate that there's any advantage for buyers at the moment. This is pretty much all sellers at this point.
Right. So definitely a hard seller's market. A lot less price reductions too. We'll throw that up as to be expected in this scenario. Basically, you're not going to have price reduction unless you made a mistake with pricing at that point. Tracking the numbers. Condition is a part of pricing, so make sure you take that into account for anybody that had to do a price reduction. But full-blown seller's market, I expect this to increase as we get into warmer weather. We need some houses on the inventory. We need some houses on the market. So until that number starts to creep up, I think we're going to continue to have a very, very strong seller's market. Great time to sell. And I think one of the things that you're seeing happen a lot, especially in the upper price ranges, why everyone's so cash flush is because they sold their other house over asking with cash. Now they have a big chunk because of all the appreciation that's happened in the past year or more, or I guess 3 years, and they're going to take it to the next house and just put it down there. So this is continuing for a while until we get, basically a glut of new inventory. And I don't really see that happening anytime soon. Now, I will say builders are popping up all over the place. One thing that we're running into is they're not that affordable anyway. Like compared to existing houses of the same size, same amenities, new builds are always going to be more expensive. So it's just a matter of, where their location is and then who can afford it and if you want to go that far. So it's still a tough market out there for buyers. It's a great market for sellers. But you can buy a house if you follow your realtor's advice. Just be aware you need to listen to them. We're in this every day. So yeah, until that changes, we're going to continue to see these numbers creep up until we hit seasonality differences again. So we'll continue to track, and I always appreciate you pulling these numbers, Danny. We won't know otherwise.
Yeah, absolutely. So we'll come back in a month and see what happens then. Until then, take care.